recording. Right. BTC. Let's start with the favorite pair of our lives. Right. So you remember last week we said we were looking for either this to have been a fourth wave here, and we started a fifth, or the other idea was on the mono wave chart. Let's just get rid of this guy and this guy for now. On a mono wave chart, we kind of still putting in the third wave that will come in at 14.5 or so, and then we get that push up for the fourth, and then finally we go down. So we're neither here nor there with both. If we had completed the fourth because of the violent move down from the highs here at 21k, it means that we are in some sort of wave 2 of a fifth wave at the moment. So let's just go a bit into it. Now, things we don't like is the initial push up from the lows here that we got at 15.4. The initial push up here didn't really take any retracements highs to the left. So this would have been the one we were concentrating on. If you look at it candle wise, would be something like that as an up candle or order block. So ideally we would have want this push to have gone above that, right, to give us some sort of market structure break there. Now we low time frame we got a few low time frame shifts in MS when we traded. Let's just go through it on a 15-minute. Right, so we still got this green, big green sort of candle here, which we're going to call an order block, right? What's up, Idris? Nice to have you. So we have this big green candle which retraced here, coming from a down candle. So let's just call it there, and we'll call that the retracement needed, or the retracement high here that we needed to break above in order to confirm some sort of market structure shift from going down to now going upward, right? And we didn't see that. So what we are in actually is a dealing range, which means the dealing range for us here is, since we broke the lows here, your dealing range becomes from the top here to the bottom here. And with the dealing range, we're going to now need to figure out, are we staying in the dealing range? Are we going to look for the premium or discount levels of the dealing range and sell everything in premium? And whether or not we break that dealing range. So if we take a fib from the bottom to the top, sorry, the top to the bottom, this would be the more or less the 50% mark here for the range, which means we can't really sell any BTC below this level here, right? We're not looking to sell any BTC below here, right? We'll make that a bit darker because at these levels right now, BTC is not considered premium. Premium levels would be anything above the 50% level. So like we had here, above the 50% level into a PD array with, let's call this an order block here, fair value gap, whatever you want to call it. That is premium selling, right? And then we came down to this order block at the bottom, and now we sort of meandering and going a bit sideways. So two things could come off of this, right? We could be engineering liquidity where this was the initial push up, and now we are in this sort of range here, capped from this to this, and we're looking for some sort of push upward here, back above here, to take some liquidity, or even above here Once we get that liquidity, we call it inducement liquidity, we would then be able to frame an idea of us going lower or actually higher. So for right now, if we use, I'm just going to put the model up that we have been using, and then we're going to work off of it because, just give me a second, right? We'll get the model. This is in the Discord under patterns. Copy image. Right, so we've been using this model and we're going to expand on this model a bit. Right, so this model here basically, and this is a bearish version of this model. Now we are going to inverse this model here and try and look for the bullish version of this, right? And that would come from any breaks in MS, and we are going to start looking for, so the bullish version of this model would then look like something like this, right? We break the lows here, and then price shifts upward, taking the highs here, confirming some sort of market structure shift, and then we're looking for a retracement into some sort of order block, fair value gap, any point of interest to give us another reversal pattern to frame this going higher, right? So having said that, if we look in here, we had a price movement upward, right? And then we had a range here that broke down here, and then we had a shift upward here, right? So that's the first sort of indication or hint here. Now, possibility that this leads to a push up after we figure out what the hell is going on in here. Let's just switch over to a 1 hour. Now, not a fan of meandering, and first thoughts were maybe we putting in a higher time frame triangle of some sort, because it would sort of make sense that we had an A wave here, a B wave here, but this is nothing to say that this is a C wave. We had an initial impulse here, we're going a bit sideways but also compressing at the same time, right? There's some compression here, so we're looking for something like that to maybe give us a C, a D, and an E if this is in the bearish case, and then we fall lower. So that was one of the ideas on the higher time frame, and the alternative is that we come up here and take the liquidity here, but all of it is framed against the green block that I've marked off here, which we'll call our order block, right? You can refine that a bit more, it would be there. So you can see here, if we drag that across, this is sort of capping the market at the moment until we can break above there or show some willingness to go higher. Then BTC will push higher. Otherwise, if this caps it, we'll most likely see BTC head down to that 14.5 target that we had. Right. So we had the order block here at the bottom. Now, so the last down candle here, this would frame our entire order block here. We had an initial push into it and a push out of it, right? So we sort of broke MS here. Now what we need to wrap our head around is if this was the sort of move here, right, lower, where this broke MS here, is all of this, or was this push higher here just an inducement liquidity grab, and now we are going sideways to head lower, right? Because the fact that we didn't take any retracement high to the left of us doesn't really put us in a bullish, any sort of bullish momentum. We're now trying to form fit or force fit something bullish here for BTC to go higher, but there's nothing really telling us that it's showing some willingness, but we need to break it down a bit further, right? So if this is a bullish case and this was the initial push up and this is the push down, then we need to figure out from here whether we're going to get that third push up. So in the idea of the model that I just gave you now would be, we get the initial push up, right? We'll call that an accumulation move up. We get a move down that doesn't break the lows here. We'll call that the failure swing. And then we get a move up here, and that's called the opposing run for liquidity. So it's a move that pushes us above this high here, that raids some sort of liquidity here and something to the left, wherever it may be that green order block that I just showed you. And then we get the push downward, right? We get a push down. We get some sort of retracement which frames itself around this level here, or this order block here. And then we continue lower, right? So something we need to be wary of, and if we put it to the model here, we would then be looking at this here being the accumulation leg, this being a failure swing, and now we're looking for an opposing liquidity run to the top side, right? Whether it comes like this, which takes the liquidity above our order block here and the highs here. Then we get a push down that breaks structure. We get some sort of retracement in here within this order block in the middle here. And then we head lower, right? So this is the idea that we're going to frame to use for BTC, right? And if you didn't get it, this is a bearish idea. If you didn't get it from what I've just done, right? So we'll talk more about it just now and give you a few examples if we can. So now we need to figure out if this is the model where we are going to hunt for some sort of liquidity to the top side, whether it's taking the order block level or just the highs here. We need to take something to the left here. We have the lows here. Let's just mark in the lows because I don't think I have it marked anymore. I've got the December 20 order block low marked off. I don't think I have the actual break of the low here. I think it comes in there. Let's make it red for now, right? And we have the order block that broke the low. So I'm just going to remove a few things here. Let's remove that. Let's remove that. Let's remove our order block for now. Let's remove that for now. Right. Can we go down to a lower time frame and see whether we get better narrative here? Which was the candle that broke the low? Was this one, right? Broke through the red level was the middle one here. Do we get any sort of fair value gaps within that one? Let's have a look. Not really. Now, this candle that broke the low is usually or generally the candle that we'd look for to come back to for order pairing, right? When I say order pairing, it means that this happened so fast. When it broke through the low here, all of this happened so fast that none of the buy stops that were resting below the lows for either breakout traders or people who are longing had their stops below the red level. Some of them weren't hit, right? You can see there's sort of a fair value gap here. And let's just drag that across and see how that's affected our price range on BTC. Right, so the middle candle that broke through the low, you understand that part, is this candle here. That is the important candle that we need to look at. We had one here, it just broke through and went back up, but I'll concentrate on this particular one here. Now we've got a fair value gap on that middle candle, and you can see how that specific candle has framed BTC's movement to the upside going across in time. Can you see that? It's capped it. Now that tells me that this candle here may be, or this fair value gap may be just order pairing, where because of the fast movement through the level that we had here, we've had a move back up into the level, and now you can see that it's sort of coming back into it, working as a mitigation block, right? Those that have longs or were long on BTC are now starting to pair their orders in here and mitigate their losses as best they can. So that is not a good idea, because that's bearish, which means we need to look at both sides now. And at the outset, we had these levels marked off as levels for liquidity, and because we didn't take any sort of highs here to the left, like I said on the order block side, we need to look for an option where BTC runs the lows here, takes that liquidity, which would then give us propulsion we need, and we're looking at 14.5, which gives us the propulsion we need to then move back higher to complete that higher time frame move. So low time frame, we need to form something here now. These are silly sort of highs here in if you look at it. Not a fan of what happened here, but you can see how that order block's fair value gap that broke the low is now capping the entire market, and this does look like it's order pairing, which is basically mitigating any losses or positions from longs to shorts, right? Now we had this move up, and then we had this move down here, right? This move down here, let's go on a 1 hour or even lower, so it looks a bit better. The move down here broke structure to the left here, right? Just like this move down here broke structure here, this entire move down here broke structure to the upside, which changed character, which created a dealing range on BTC. So the moment you get something that you get action like that happens like this, right? This move here, which breaks structure here, it creates a range of dealing, and all we are interested in is where's the premium and where's the discount of that particular range for, in this case, shorts. We'll also be looking at the PD arrays needed. So let's try and take it from there to there. So anything above the 50% here would be used for shorts, and if we use the last up candle here, order block theory, use the last up candle, magnet. Here you can see price came into it. There we could use rejection block ideas in here as well, where all of these wicks created a rejection block, and you can see then you can, let's make it red. A rejection block is basically a sort of order block where price rejects off but doesn't go, in this case, above. So you can see that price rejected off of it and is heading lower here. Right, so we got the first phase, and then within this phase here now you can sort of start to see the same model that I gave you just now, right? Where we have that accumulation, failure swing, opposing run on liquidity. We're going to look for retracement, and then we'll get a push and then retracement, right? Same as the model that I showed you on from the Discord. Now put that into what BTC is doing. We have accumulation, failure swing, opposing run on liquidity, right? So this went for all of these, and maybe here. And we are getting the push up here, right? Which came back to the order block, which means we are going to most likely get a push down here like this. Sometimes you may get a push down here, and it may come back up here into this and then push down. Overall, it looks like it wants to push down, and if that's the case, then we need to be looking at which areas can we then enter in if it is pushing down, and then where is it most likely to go, or where the draw on liquidity would be. It would be below the areas that we have marked already with the dollar signs, and you can see it's these lows, and finally, if it really wants to, the lows down here. So we'll keep with the idea that people are order pairing and mitigating losses here. I know we had the idea where we're looking for that kind of push up, but given the context of what the market is or has been doing over the past 2 weeks, I don't want to be too bullish until the market sort of gives us an indication that it wants to be bullish. So we have another sort of case here where we can call this accumulation, failure swing, opposing run on liquidity, and if the market comes here, right, if BTC comes here, then this would be another opportunity for us to actually sell and run it down lower. So it would then give us this move here, right? So this is what we'd be looking for on BTC, and we'll frame that around ETH as well, simply based on the model that I've shown you, where we had an accumulation, a failure swing, a run on liquidity, a retracement, a push, and then head lower here, right? Often what happens is the middle leg of the move, now you guys know it as me talking to you about it as inducement, right? Where the middle leg holds liquidity. Can you guys remember that? It's the middle leg that holds the liquidity, and I often refer to it as inducement. You can see that price has come back into that middle leg here, into that order block or rejection block. You can see it here. And if I just pull the chart up once more, let's paste it in here. Right, let's do that. Now, can you see here we have the sort of equal highs here on the middle leg, and if you look at the model, you'd also notice it here, right? The equal highs in here. That's sort of the same idea that we are having or wanting to reproduce here, where this comes back into that inducement sort of level, and now we are pushing lower here. So we need to figure out where can we enter on BTC again. So we have another leg here. Like I said, we have another leg here coming up. So this was the first entry, and I should have seen it yesterday when we pushed up into this level here, because what this is creating on a smaller time frame is another model where you have that and that. So accumulation, failure swing, run on liquidity, retracement into there, and then the push down. Can you see that? Now this push down can most likely or often push back up into this area here where there is more selling or mitigation happening in here, and then head down lower. So our plan for BTC based on that model and liquidity is for BTC to push back into here. If it does, then we'll most likely sell here and take this lower, right? So let's see how that works out for BTC. I just want to check something really quickly before we continue to ETH and all of the other ones. Just give me a second. Any questions? Guys, have any questions? Anything at all? TikTok? Let's get back to the TikTok, guys. There we go. Right, so is there anything on this low time frame to indicate to us that BTC may want to push higher? So what we did get here now is we had a run on the lows here with this candle here. We had a fair value gap in here. You can see it's capping price. Let's zoom into that a bit more. Why do I have such a big stop loss? KC4321, that's not a stop loss. Don't get confused. This is just basically a premium and discount array. It's actually a fib level, not a stop loss, right? It's all this is telling me here is where the 50% is in relation to the swing that we have. So I know where to sell and where not to sell. It's not a stop loss, but I'll take it out just in case you get confused there. Right, let's get into this quickly. 15 minutes. Right, now we had a run on the lows here. Come on in, yeah, let's call it here, right? This was the run of the lows. Let's give that a bit of color and girth. There we go. Now, in order for us to, there are some sort of indications that this wants to push a bit higher. We'll have to go down to maybe a 5 minute to have a look at it. This is a pretty long candle here. Can we use one next to it? Very ugly candle in here, right? In order for us to, and this was a down candle, so likelihood is that when your lowest candle here that you see here, right? This was the candle that took the lows. Can you see that? Let's just see here. This candle here, right? It took the lows, and it's a green candle, which tells me that if we want to see price push down from a level, right? Let's do that. Make it, in this case, black. We'll make it black because we are looking for this to be down candles. Right, in this case we had a move here and we had a move here like this, right? These are the down candles coming into or off a low, right? And in here we had a fair value gap. Let's call that a fair value gap in there. You want to see these sort of down candles because the next candle that forms in this range here, if the next candle that forms is something like this, and we'll call that a green candle, make it a bit darker there, right? So the next candle that forms is this, then, and this is the candle here that took the lows. This candle here, the very last candle, is now your order block, right? And we most likely would have had a wick of some sort down here. Terrible wick there, right? That's even a worse one. You get the idea, right? Let's just call that a wick. And we had the fair value gap in here. So this candle here is a green candle, but the candle that came down here, whether this green candle shot up like this, all that does for us is it makes or confirms that this entire series, or the very last one here, is an order block, right? Now that candle was a down candle, so that's okay for us. If the candle that took the liquidity, if we had the situation where we were here and this candle was sort of lower or wicked lower like this, let's get in a tool here. So if this candle wicked lower here, let's call it that, and that was the lowest candle, but it eventually went up and became green, so it ended off being a green candle. This is not a good order block at all to be using. The last down candle didn't take any liquidity. I wouldn't be using this as any sort of order block here that I would expect price to bounce off of, right? I'll give you an example. Let's see if we can find an example here that got raided. Right. This is a good example here, right? We had this move up here, grab liquidity here, and then headed lower, right? But the fact that the last up candle here was not the highest candle, it was actually a down candle here, it makes this sort of a poor high or a poor order block. I would disregard this because these are often raided. So once we start to see things like that, and you see one here as well, the last up candle in the, here for a bearish order block, and this one, you will notice that these candles then get raided later on. If you look to the left, you see that these are poor candles, and then what happened here and what happened here, right? Those got raided because they weren't as strong. What's up, King Bear? So when you start to see weak sort of order blocks like that, give me a second. When you see weak order blocks like that forming, then those are red flags. And the fact that we are seeing one here at the bottom here, let's get rid of this. The last candle here that took the lows in this, sorry, here, is a green candle and not this long black candle here. It means that most likely this price is going to get raided, right? We'll watch out for that. It's going to do that. And the fact that this is an ugly long down candle here, it hasn't given us any smaller candles which we can work off of. So if it gave us a black candle down here and then we had another smaller black candle and then a push up, then we could have worked with something. But the fact that the candle that took the lows, the lowest candle here, was a green candle or an up candle, there is no order block or anything inside here to hold price up. So what's going to happen here? This is going to get rated. Then most likely we're going to see something form here. And then once we see that and a series of candles forming, let's put that in again. So we got the lows here, and once we come into the lows and we start to see things like this happen then, right? In my case, it'll be a black candle. Black and black. Right, once we see down candles like this forming, and then it runs through the low, and then we see the green candle afterward form like that, then we have something to work with in terms of this being an order block in here, because this green candle has traded through the black candle, which was the lowest candle. Let's call it a wick below there. It makes this an order block. So what we would then be looking for is price to come back into it here and then go up. Does that make sense? So green down candles are bad bullish order blocks, and in my case or in your case, any up candles that are down candles are bad bearish order blocks. Those will get rated. So what we want to see is no violent down candles, because if you use the entire thing here as an order block, it's pretty big, right? So, and we wouldn't even use this as an order block because you had price trading below here, which is a green candle. So this theory here, we want to see this get rated, this low get rated here. We'll mark it off. We're going to see the low get rated. We want to see smaller down candles forming, and then we want to see a bigger up candle form here, which trades through the down candles here. Then once we see that, then we can say there's a market structure shift on the lower time frame, which would give us an aggressive or early entry before any bigger break of structure that happens up here, right? We get an early entry in here, and then we look for price to trade back up like that. So for now, let's wait for price to trade through this, give us this, and then we'll take it up there. Right, so that's the BTC plan. That's what we'll wait for. I'll keep this on. We'll track it a bit later and see what happens there. ETH. Let's get an ETH. Same story.
Poison real.
Yeah.
Yeah, can you check I don't know if you saw that chart I posted in Discord.
Look at it now.
An hour chart. No, it wasn't just now, but it was a little while ago when Al Dente was asking. So
talking about,
I've worked out
Bitcoin.
Yeah, it's a 1 hour.
Bitcoin.
Yeah, Bitcoin.
Yeah. Now can you see I have a, oh, there's it up here, right? Is that the one we're talking about?
Yeah, the one I posted.
Can you see it on the screen?
No, I don't.
You don't.
I still see your ETH chart.
Okay, hold on 1 second. Okay, it's too big to post on the screen. Okay, but your idea, let me just open this up again. You were looking at
1 hour.
Right. So I think we have something down there. There's an FV. Is there an FVG there? Let me have a look there. Let's go on to our actual BTC chart, because like I said, there's draws on liquidity. So you're talking about here somewhere, right?
Correct.
Mark it off here. Now, can you see here? I have something else that's a bit tinier here, and it's labeled BPR. Can you see that?
Yes.
Right. So BPR is basically just called a balanced price range. And all that means is that price traded so fast. Now, what you're seeing is, what time frame was that, by the way? Let me have a look here. Was it an hourly? You were looking at an hourly.
Yeah, correct.
Okay, so you were looking at an hourly, and then price came in and then moved away. Let me have a look at that. So okay, on your hourly, it was, okay, so that's sort of scrounged up like that. And you were looking at, let's see if I can get it right, somewhere here like that, right? That was this was the fair value gap you were actually referring to. Am I right?
Yeah, correct.
Yeah, okay. Right, so let's just take that off for a bit. Now you can see I've got this area marked off as a drawn liquidity here. Right, so if we want to go higher, then we need to take some liquidity to push BTC higher. And this here would be a perfect candidate. So drawing on this, then this one next, and coming into your fair value gap now. I don't have the entire thing marked off, but it is a fair value gap as you have it. Right, so this entire thing was a fair value gap at one point here. This entire thing was a fair value gap, right? You agree? And
yeah,
it moved across to the left. So this was the entire fair value gap. Then you had this bit of price action that came in, but still left some sort of gap to be filled there. And what I've done is I've refined it a bit more. And I just want to see which time frame I actually use to refine it. Here, right? Okay. So basically a balanced price range would be two fair value gaps. So in this case, you can see you had a move down here, which left fair value gap, let's call it here, and make these black candles here. Right, I don't know why I'm drawing it out when there's actual candles here, but bear with me, right? And then we had a bit of a consolidation sideways in here. Let's just give it some random neutral sort of color, yellow, right? And then we had a push up from there, right? Strong push up. Or we had, in this case, a bit of a move here, make it a green candle, and then we had another push up after, something like this. Right, strong push up. And on this candle here, before the lows, we had another candle coming down here like that. Right, so that put in the actual low. Basically, a balanced price range is when you see two candles like this that create fair value gaps on both sides. So on the one side, you had sell side inefficiency, buy side imbalance, right? ICT calls it SIBI, right? So on the sell side inefficiency and the buy side imbalance, right? And on the other side, you have another move up, which he calls buy side inefficiency, sell side imbalance. So the opposite of that. And what that creates is an overlapping fair value gap. And what we actually do with that is between the two, you can see that this candle was a very long candle here, which created a huge fair value gap. What we do between the two is we take the smaller of the two, which would be here, and we take it across in time. And then this would be actually become the zone that we would use, but I wouldn't call it a fair value gap, we'll call it a balanced price range, right? Still gaps in there on either side. So this is where I would actually look for price to come into when BTC gets to that level that you were talking about. So you're going to see that there may be a point. Let's get rid of this now. There may be a point here where it fills entirely that fair value gap. So we had the fair value gap on the H1 that you were talking about here. That's the gap you're talking about. But you may find that this candle will fall completely down into the balanced price range portion of it. Right, so, and that's just, doesn't matter, that's just more for precision than anything else. It's not, even if you took some sort of entry in here, the one thing you need to be aware of is you're not trading the actual level, right? So you're not going to say, this is a fair value gap. As soon as price comes in, what is this price here? It's 16,165.60. Let me set an order to buy. And what I'm going to do is I'm going to put it at 16,156 and I'm going to put my stop loss all the way down here. And then I'm going to target some sort of high up here. You're not going to do that. You're not trading the actual level. What you're going to do is you're going to see what the reaction to that level actually is. Because
correct.
What this move up here actually did for us, right? What this long green candle did for us here. We had a down candle here, right? We call it a short-term low because it had two intermediate term lows to either side of it, right? So this is a classic ICT swing low, right? You agree on that? It would be like that, and then you have a longer candle in the middle, and then you have a shorter candle on the right side of it, and that would be an ICT swing low, classic swing low, which would make this very last one the order block. So whether you're using the balanced price range or you're using the actual order block, this would be your order block in here. And you'd extend that in time. So now we have order block within order block. I'm going to take off your fair value gap and I'm going to leave the balanced price range in there, and then we're going to call this an extreme order block because it's on the extreme end, when in actual fact it's the entire series of down candles which create the order block. You get that, right? It's this entire series of price that actually creates an order block. So it actually would be all of that, which coincidentally also coincided with your H1 fair value gap that you had, right? But what we are doing now is we are looking for price, because there's a balanced price range just above that order block. We want to see price, if it does come, it wants to come into this order block, and when it comes into the order block, then we're going to look for any signs of reversal. So what would be looking for when it does come into this order block? And the balanced price range. We want to see reversal patterns, right? Even though this may be a draw on liquidity below here, it's a valid swing low, right? And if that's the case, and we sort of get something like this, where we have a low and then we have a higher low, and then we get something in here which is another higher low. So this is starting to frame something for us, right? On the upside, which means when price starts to get into this swing low, because when this long green candle was made, right, it had a fair value gap inside here. When this long candle here traded through the down candle to the left of it, which we are calling the order block, as soon as that traded through it, it validated this being the order block, right? So for an order block to be validated, the candle next to it has to trade through it and through a fair value gap and close above. So you'd often see this fair value gaps near the order block, and once price traded through the order block, it validated the order block. But once price traded above the fair value gap and closed, it validated the order block and a shift in market structure there. So when price came back into it, that was a buy, right? Now I know that maybe something I may have to go over. It's not my concepts and I can't really go over it. I can only direct you to the person that has taught me this concept, but it's not a difficult concept to understand, right? If you are looking for anything to be an order block in this case, there's two types, there's actually about three, but what you want to see is your order block is a down candle, is the lowest candle, that checks the list, right? It's not like that other candle we spoke about, but the down candle was actually an up candle that retraced quickly. Now, in this case, you have an order block or a down candle, that's the lowest candle, and you have a fair value gap. For a change in market structure, what we generally considered before was if you had a low that came, oh, this is terrible, hold on. If you had a low that came like this, right? This was downtrending price, you agree? Where would your change in market structure be for you to be bullish? Where would you say I can now start being bullish as soon as price does something? Where would that be? Right, I'm just going to label it for you here. 1. Make it big. One or two. Where would you consider a shift in market structure where you would then consider becoming bullish on this kind of price action? Especially if you had something like this where it ran a low.
Yeah, I would say 2, but it also depends on the character at which it goes through too, right? So I think that's something we don't always pay attention to is how does the change of character happen, right?
Correct.
So that the big green candle we're looking at, that's obviously a bullish candle, right? Versus if you've got a bunch of choppy price action gets above 2.
But even if you got a bunch of choppy price action, this is I won't say a cherry picked. Let's call it a cherry picked, in the words of ICT, a cherry picked example because it's a long green candle, right? But you would consider a shift in market structure at 2. So if price did that, we would say it's now changed character, right? So the first sign would be it changed character, and when it did something like that and then broke up again, we would call that a shift in structure, right? So the first one would be what we call a change of character, and then when it broke up again above here, we'd call it a shift in structure, right? Because it went from trending downward to now trending upward. If it was still trending downward, then we wouldn't expect it to break number 2. We would want it to come somewhere here and then head down there, right? But the fact that it broke 2 gave us a change of character, and then what followed was another break of structure to the upside, gave us a shift in structure. But what I'm showing you now, which is not my concept, is there's an earlier way to figure these out. There's an earlier way to figure these out. And if I can find another example really quickly, I'll try and do that, because this was sort of a cherry-picked example. Maybe we can look at NAS or something really quickly, right? Let's go on a 15-minute. Right, in this price action here, right on the screen here, you can see it here. Let's see if this sort of works out for us, right? we have an up candle here, which is the last up candle, and it's green, so that's good for us, right? We want to see that on the top it took liquidity here. That's a good thing. Where would you consider a break in structure in this move up here? Where would you consider a break of structure happening here? Let's just,
I'd probably say that larger black candle with the wick.
so let's call that 1. Right, let's call that 1. Let's call this 2 here. And then we'll call this a bit of a shitty one, because the 1, I'm going to name this just 3, but I don't know. These are almost equal. Yeah, let's call that 3, right? Let's call that 3. Because on a 15-minute, let's go down to a 5-minute. And maybe we're going to see some other things in here.
I may have to drop off for
yeah,
a few
no problem.
minutes.
It's being recorded, so
Well,
you'll be able to
yeah.
catch this on, right? Right. So there's 3 here. That was the long one you were talking about. There's 1 here, and then there's 2 all the way down here. Where would we consider a market structure shift?
I mean, I would pick 3, but this one's a little bit iffy for me.
Yeah, because like, you see the other one was cherry picked, right? That had a long,
Yeah.
long candle that actually helped us and gave us some insight. So we have 1, 3, 1, 2, and 3, right? 2 being weird. I could have just maybe even put it there on a 5-minute. Where would we consider a shift in structure here? Let's see, guys.
Oh, yeah, I'm gonna.
Yeah.
Yeah.
So you're saying 3, right?
Yeah.
You're saying 3, 1 and 3, right? Ordinarily, what we would have said was 1 or 3, both work, right? Because the price action came in here and then pulled back and then moved on, right? 1 and 3 works. 2, you'd be insane if you said 2, right? 2 is a nothing. I just put that there for some randomness. So 1 or 3, right? What if I told you that you could get an early entry, and I just want to see something here. Let's go on a 10-minute, back to the same price action. Maybe we're going to see something else. You could get an early entry before actually 5 minutes, before actually 1 and 3. Right, you can get an early entry before 1 and 3. All we needed was a fair value gap, right? So the fact that we have the last up candle being a green candle and being the bullish order block, right? So it's this candle here. You agree? That's the candle we are talking about. For you to get a shift in market structure, you need to see that candle being traded through. You agree with that? That's what validates something as an order block. Remember, we had all those series of down candles we spoke about earlier, where we had price moving down like that, right? And then we had suddenly we had one long candle there that validated those. So in order for you to validate something as an order block, you need the order block itself to be traded through. In this case, the low or the opening of this order block here would be here, right there. And usually what happens in here, if we go down, let's go down to a 1 minute, right? We're going to see this a bit better, hopefully. So two things are going to happen. You're going to see a fair value gap in that order block, and then you're going to see price trading through it afterward. That was in here. Right. This was the order block. No real fair value gaps. What you generally would see is some sort of fair value gap, right? The only fair value gaps we get in here is here. That was the order block, and this was the candle trading through, right? So in this case, what we got first was price traded through the fair value gap, and then price traded through the opening of that candle that we saw on the 5-minute, right? Go back to the 5-minute. Usually you'd see price trading through the candle and then trading through the fair value gap. In this case, we see it trading through the fair value gap and then the opening of the candle. So what that actually does for us is, once price trades through the up candle here, it validates this as an order block, which means any price that comes back into it, you can sell. But what if I told you, once you get that validation, you can just sell? Just take a sell once price does that for you. You had the FVG run and you had price trading through, you just take a sell. What if I told you that was your early aggressive sell? Would that be something you'd believe in? It's a crazy concept that I just learned, and it's not even my teaching, and I shouldn't even be showing it to you guys, right? But there's the theory that once you validate something, even without the early or the late break of structure here, which we normally would have done, it's on the low time frame. Once you start to see things like this and price trades through the opening of the candle or the order block, through the opening of the order block, through the fair value gap that formed, you can immediately take a sell on that. Crazy, right? Go and test that theory. Go and test the theory out if you don't believe me. Now for precision, what we would have done is we would have waited for the range to form, right? And we would have looked for, let's take it body to body, right? We would have waited for the range to form. So once you had buy side taken out, you had sell side taken out, it gave us this being our dealing range, right? So that's the one that we are normally or generally look for. We look for price to do that and then break structure down there, and then what do? We take our fib, we pull a fib from the top to the bottom, we look where the 50% is, and the 50% is then in a premium array for cells. That makes sense, right? This is where this comes into play. Anything above the 50% is considered premium or expensive. You wouldn't sell anything below the 50% in a if you're looking for shorts, right? So then in this case we'd look for, once we pull our fib, we have the dealing range formed. We took sell side, we took buy side, so we took buy side and then we took sell side. We then have a range that has formed here, right? Consider this one long candle here. Let's try and make that a bit darker, right? Say that was one long candle. So what you then do is pull from body to body and look for the 50% of that, which is here. There you go. And that's your sell. Now, how is this sell here? It's a safer sell compared to the sell that we took in here, big difference. We took an aggressive sell that actually gave us 50 points more than waiting for the safer sell. But the safer sell would have had a bit of a higher stop in here, maybe above here or above here. Right, you have a balanced price range within here as well. Back to that idea of a balanced price range. Let's go here. Wick and wick. Can you see that? And then you had one overlapping here on the black candle, which was a bit bigger, so we take the smaller one. When price closed above, in this case below the balanced price range, you can just sell. Sell it immediately. Stops above the high, don't look back. So you have two things now. The first is confirming the order block when price moves through it. That's confirmed there. You have a balanced price range which is above that. Price has closed through it. Immediately sell. If you were looking for precision, you would run a fib from there to there and try and get an OTE entry, 50% entry, something in here for you to sell off with. But you can see in this case you didn't get that. You didn't get that entry. So we actually got an aggressive sell based on what? The concept that an order block was validated once price went through it, and once price closed above the balanced price range or the fair value gap, it's an immediate sell with the stop above the high. Even if you got a more precise entry by using a fib, your stop would still be above the high. So either way, it's still an entry for you to take, and it's a crazy concept. Go back and check that out, back test it, look for good order blocks and balance price ranges, and you'd see once the liquidity is taken and then the order block is validated with the fair value gap or the balance price range, go and back test that, and that's all I'm going to tell you about this one in particular. If you want to know more, DM me. I'll send you to the guy who actually teaches the stuff. You can maybe get more information there, right? So ETH, let's have a look at what BTC is doing here, right? So remember I said that BTC is going to want to come and run the range. You can see it's starting to come down towards there and run the lows, and then if it bounces up back into this level here, we're going to short it here around 16.7, 16.8, and run it down to that BPR, balance price range, extreme order block here. Then we're going to look for the bullish reactions based on this model to take us higher, right? So that's BTC. ETH looks like it wants to come to the extreme order block. ETH's been relatively strong overall, hasn't taken its lows, so we're looking for ETH on a lower time frame to come back into the extreme order block, and this extreme order block is probably an H1, H2 maybe, right? On an H1 it was that one there, and that's where we're looking for ETH to eventually come into, and then once in here we'd look for signs of reversal, and then we'll run it all the way back up to inducement levels or higher. We'll see what the look back is once the structure shifts. We would then have some highs that formed in here. We'd have this, and finally this into a fair value gap. And if we draw a fib here really quickly, this is our dealing range because we took buy side and then we took sell side. This becomes our dealing range here, and the 50% lines up with the fair value gap in here. We'd look to sell ETH around 1370, 1400 to maybe get a gap down there, right? So extreme order block around sub 1100 to 1400, and then sell off. Us30 last week in the Telegram, and I've always said this, that we were looking at the weekly profile, and the weekly profile which I have in the Instagram and the Discord was a classic Tuesday high with Thursday being the low of the week. You can see we started off here on Monday I don't know if I can pull, I don't think I can pull that up right now. It's available in the Telegram. So basically what the profile says is that most likely Tuesday creates the high of the week, and Thursday creates the low of the week, and Friday is a retracement. So price, if you look at this as an entire weekly candle, you have an open on the candle, price traded up, leaving a wick, price traded down, giving you the body of the candle, and then Friday retraced and closed. So you have an open here, you have the high here, you have the low here, and then you have a close here, right? Now let's look at that in terms of NAS. You had the open here on Monday here, price traded up, traded down into Thursday, and retraced into Friday. Can you see that? Open, high, low, close. The guys in the Telegram would have seen me talk about the weekly profile where Tuesday puts in the high of the day. Now the other interesting thing to note here is we have taken liquidity here. I just want to have a look on the left side. We haven't taken any liquidity really to the left of this. We have an inducement level just above us. So there's a possibility that US 100, US 30 may want to push up for this inducement level here, take that liquidity, and then roll over. So we have this level hanging above our heads. We haven't really taken any liquidity other than the highs put in on Tuesday. And I think there's some sort of news this week calendar wise, so we'd want to watch out for that. I do see a model printing in here, but I'm just going to be cautious of how I do play it on this time frame. So on Friday, what we actually did, or what I actually did, was on the even lower time frame, pre-New York open, right? Price sort of consolidated here, broke down here, right? Came to this low, which gave you a sort of a break of structure there. And I actually had people shorting here, friends of mine. And then what happened at New York? You had a Judas swing at New York, takes the highs out, and then immediately sells off to target. So my first entry on this was I was looking at this balanced price range in blue here on the lower time frame, right? That is where I was framing an entry purely based on the fact that we broke structure here. I was looking for a pullback above the 50%. It coincided with the fair value gap running here and the balanced price range within here. And as the Judas happened and came down, I sold into here. So didn't sell above here. I could have. We sold at the balanced price range, and I rode this down here into a fair value gap on the higher time frame that came within this level here, H1, H4, right? And you can see that this order flow is bullish, right? So it went from here. I had guys that actually bought down here. ICT, if you're on the TikTok. So we had this, you had this, and then we had this in New York, and then price came back to test the top of this and this fair value gap that it left behind. And what it did after, price pulled back into the balanced price range. And what did I do? I sold it again and closed down here. And what model did this actually give us, which I spoke about at the beginning of this video? We have accumulation, failure swing, opposing liquidity run, retracement or push, and then retracement, right? Now look at that. We are most likely probably maybe see a bearish Monday here. Probably want to trade down here. There's probably some arrays lower in here that it may want to tackle, especially with the news maybe around Wednesday, Thursday. The fact that we had this as a three-wave move to the upside means there is liquidity resting here. This was the relative equal lows at Asian low. This is a three-wave move to the upside, so a 1, 2, 3 move up. We have relative equal lows, inducement liquidity lying here, and liquidity lying here in a fair value gap. So we want to see maybe price push back down here before it pushes up here or considers pushing even higher, right? That may come in on Tuesday. So as price sells off here like this, Tuesday low of the week, and then we get a bit more bullish into the inducement level that we're looking for on the higher time frame up here. Then we would start to look for shorts and tackle every single low that US30, NAS, S&P made on the way up, right? So once we take the liquidity, we can consider selling into these, all of these, and take out these relative equal lows there at the bottom. Right, so that's US30. Gold, we have a break of structure. So basically what this gives us now is it gives us a dealing range from up here. If I'm going to use my little Gann box, it's going to be from the top here to the bottom here, since we had a break of structure below here. And we are going to sell anything that's at or above the 50% level here, right? Look for some PD arrays. So you know we have trendline liquidity, you have liquidity resting there, liquidity resting there. If you go on a higher time frame, we can probably find some sort of order block in here. If you wanted, you could take a fib from the top to the bottom, and you could sell at the OTE. That may work. So look for, if this trades higher, above the 50%, look for reversal signs here to take gold down there, right? Oil, high time frame, it is finally come into our point of interest, but you can see that it's come in and already wicked back off. So this we've had actually from the 26th of September. We were looking for oil to come back into this. It made relative equal highs here. Oil came back into this, into the order block here that we have marked off, and this is giving us, there's the model again, right? Let's do this. Accumulation, failure swing, opposing liquidity run, push, come back here for retracement, and then we're looking for that. Same model, same idea. This is giving us bullish vibes, but we'll have to see news-wise whether that can back it up with China and whatever else is going on in the world, right? This was actually an anomaly here because of an airstrike on one of the oil tankers, so you can see how that pushed. So now low time frame on oil, we're looking for reversal signs here now, right? We have something that's telling us there's a possibility here. We have a balanced price range. No, we have a fair value gap here. We have a bullish order block. Price traded through it down here, and we are in the fair value gap at the moment. So once price trades above this fair value gap here, we would look for a push back into this order block here, right? The down candle in here, I'd look for a push back in here only once price trades above the fair value gap, right? So there's your fair value gap. We want to see price trade above the fair value gap, which is there. We've already traded through the order block here, so that's confirmed that is an order block. We don't have any shift in market structure yet until we break and close above the fair value gap. So once we get this sort of candle coming in here, any pushes back into this level we'd look for reversal patterns here in order to take oil, and then we target here, 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 and up here, right? So the drawn on liquidity would be anything to the upside and higher. Does that make sense? Whoever is on the Discord there, please mute yourself if you don't mind. Al Dente, that's you. I'm just going to mute you for now. Right, so this is an early buy on oil, right? Super early. Ordinarily, we would have, there's no retracement levels coming into here, so we would wait for that to break. But once we wait for that to break, it means we're going to have to wait for whatever happens in here to come up here, and then eventually come back in down here, and then go up, right? But what I'm telling you is, we have the fair value gap sitting in here. We're in the, so we have a fair value gap in here. Once we close above this fair value gap here, think bullish and think once price retraces into here, you want to see that. And if you want to see that, then what you need to be doing is, we'll take a fib if necessary. Take it from the bottom to wherever that close price is. Anything below the 50% and into this bullish order block here, that's where you're going to buy oil. What's up, Caddy? Mr. Banana, I probably spent an hour at the beginning of the stream talking about BTC. So this will be loaded on my YouTube channel. You can check the YouTube channel out, and this will be uploaded after. We're just going to try and run through whatever we have left as quickly as I can. I have a few things I need to do. Right, anything else you guys want to look at before we close shop here? Yeah, what is that? We've gone through oil, we've gone through US30. We could take DXY. Right, so DXY. This is on a 4-day, very high. Can you see that DXY, even though it's still within this leg here, right? We only get super bearish on DXY once it breaks this level here. This is the break of structure, market structure shift level here. This is just an inducement level where this is where the liquidity is lying in the inducement here. And we can go a bit sideways, but if this starts to push up here, and on the lower time frame, maybe a 6 hour, 12 hour, let's just take a look at that. Right, again, not liking the down candle here being an up candle, so maybe we're going to push a bit lower on that one. Right, on this time frame, yeah, it works. You can get some bullish things coming out of this. So order block here. Order block confirmed here. Can you see? Now watch this carefully, because I just showed this to you on oil and it's actually played out on the DXY. On oil we are at about this stage here, right? This is where we were on oil. And this was the top of the fair value gap. You can see once price closed above the top of the fair value gap, what happened? Price pushed into the order block. Can you see that? And then started to push away. So watch this now here and go back to oil. Close above the fair value gap. We've already validated this as an order block since price has traded through it. Close above the fair value gap. Look for price to come back into the fair value gap, into the order block here, and then we'll take a trade up there. DXY has already done that. Price is closed above the fair value gap and traded through the down candle, which confirmed this as an order block. Price then came back into the order block and moved away. Can you see that? Simple ideas, simple tricks. This is also starting to give that inverse head and shoulder kind of vibe here, right? Again, same idea that I've been showing you. Accumulation, failure swing, run on liquidity. You're gonna get a push here, retracement there, off to the races. Gold killer, we've already done gold. Basically, this is the idea. We've broken structure. I'm gonna do this in 1 minute for you, right? We've broken structure here. Below here, this is our premium discount array. These are the levels of liquidity, trendline liquidity lying above that. This is your 50% level here. Anything above the 50% level in a PD array, there's a bullish order, there's a bearish order block lying in here. Anything above there that has taken liquidity, so anything above there, pull a fib if you have to. Use your OTE, use your golden zone, and that's where we want to be selling gold, right? Idea behind gold, same idea. We had accumulation, failure swing, opposing liquidity run, push down, retracement, and then we're looking for that. Does that make sense? Give me a second. Come back to that. Right, it's the same concept over and over and over. It's the one I've been showing you, right? You come into the level, you break structure. This now becomes, from the top to the bottom, becomes your dealing range. You are going to look for premium arrays within here above the 50%, so you'll pull a fib from whatever it is to whatever, from the top to the bottom. Anything above the 50%, you'd look for levels there. Ideally, you may find a candle in here like that. So this may help you there. If it's above the 50%, you may find a fair value gap up here. I don't know. Whatever it is, look for reversal sign there. Your stop is always going to be above here. Right, simple model. Let's pull that on. Give me a second. Give me 1 second, guys. Has gold taken anything to the upside which we can significantly say? Right, gold tapped the bearish order block, and again, not a fan, so chances are we have an inducement level on gold to the top side here, right? So the inducement level, technically this is the inducement level here. It's the last high before the break of structure here. We've taken all of these levels here, so that's the draw on liquidity. We have an order block here, but the fact is on a daily time frame, it's a down candle order block. Not a fan there. On the higher time frame, this would be the possible drawn liquidity for gold. So I wouldn't be surprised if we did something here and we shot up here just to take that, and then we start to sell off. Because when you do sell off, this is not looking like the best of sell-offs or to begin with. So when there's hardly any displacement in here. If you can see that there's no violence. This is violence, this is violence, this is violence. What we're seeing here is just 3 down candles, which could eventually become an order block, because you may have one long candle that goes through them like that, right? Long up candle. So it's going to confirm those 3 candles that you're seeing here as some sort of order block. Then when price comes in here, you're going to buy it and you're going to wait for it to run the liquidity, which is around 1807. Once we run the liquidity at 1807, that's when the fireworks will start to happen. Because whatever structure you put in here, you want to see a long down candle which breaks structure, which would then give us a dealing range here and here, and any retraces back into this order block. So that's the level we're going to watch. Any retraces back into this level above the 50% for gold is going to give us what? It's going to give us a massive sell on gold, and the target is going to be these ugly relative equal lows where all of the liquidity is lying. So from here, even if you don't catch the top on the low time frame, maybe you're going to catch something. On the higher time frame, we'll look for a pullback here, and we're going to sell to take all of this at the bottom. Right, so yeah, this is going to be interesting gold coming up. I wouldn't be too bearish on gold right now. Chances are it may just stop where it is now, dead in its track. Give you these relative equal lows coming in here, and not sell off, right? We'll have to see what happens here. So which means maybe we need to look for some buys. Once we take liquidity, we can look for low time frame. We probably can look for buys here, low time frame. It's already giving you a buy setup here, where you have the fair value gap here. Price is closed above it. It makes this an order block in here. When price comes back into this level here, I'm going to look to buy gold and take it where? Take it here, take it up there. If you're lucky on gold, you're going to take it way higher than anyone else expects. You're going to take it, if given the opportunity, right to this inducement level here. Obviously not going to be a straight line. There may be some meandering around the corner, because what do you have here? You have a level here, and we just ran below that level. Now we are going to see price come through that level most likely, and then back into that level and then push up. So this is going to be the consolidation level to watch. I'm going to take off this for now. I'm going to take this off. So something like that. But there's an early entry on gold here that I'm showing you that you can most likely take if it presents itself tomorrow or today, or later today. Is going to be price pulling back into the order block down here. Watch for that. Your stop's going to be below the lows. Your entry, whether you take it at the 50% or just at this level here, that's up to you. There is, you could use this, take it at the OTE, so that's going to take it almost at the beginning of the order block. That's 48, and the low is 47.51, so that's a pretty tight entry for us to attempt something on gold, right? because we've already did the things that we needed to do. We've got an order block here that took liquidity. Let's pull this to the left side here. Why did I have this line? Oh, that's relative equal lows, right? So we didn't take the liquidity there, did we? Let's have a look. We didn't just yet. Interesting. Doesn't mean the idea doesn't work or won't be the same, right? We trade the setup and the reactions on the level and not what we actually want to see happen on the chart. Leaving relative equal lows, that's fine. I'm okay with that. Right, so pulling back into the order block here for tomorrow. I'll take that happily. And what we would need to create is something like that. So anything anything below the 50% level is a buy. You have a fair value gap in here. Do we want to be taking that? It's at the 50%, so you could possibly take that. That can be an entry. You have another order block within here, right? So plan your trades around these levels here. And what you're going to look for is, say we take it there. You're gonna do that, and this is gonna give you massive risk to reward here, because you're gonna go for every high to the left of it. Right, and remember what I said, we want to get back above the green range, which was the consolidation before we broke below. We may push back into here, I don't know, but this is a good entry. If you get any pushes back in here, look for FVGs, any sort of PD array that you're looking for, which would be at the 50% of this range, and yeah, buy that. Add a second entry. Right. I think that's about it, guys. That's about it. Anything else before I leave? I think we've spent way too much time going over stuff and teaching stuff, so we'll leave whatever else for the rest of the day. If you guys want to join my Telegram, it's a free Telegram. The link is in my bio. Just click the link. You're welcome to join. We talk about a few stuff in there. I do run a private Discord where we do more of the stuff in there, and whatever else you want to talk about and whatever else you want to learn about, that all happens in the private Discord. It is a paid Discord, so just be wary of that. But for those that are in the Discord, most have made their money back within the first day or two already. So we do talk about and post a lot of charts within there. Us30, let's have a look at something really quickly. S&P, is S&P cooked? Let's have a look at that quickly. No, right? Not cooked yet. Still has upside, so that would align with our NAS and US30 kind of play. We want to take the inducement liquidity above here and then roll over. So going back to US30, let's just try and frame this, because this is the pair that I actually trade. I don't trade NAS 100. A lot of wonky price action, manipulated sort of price action already. So if we start to get this tomorrow, that would be into Tuesday. That would be the buy I would like to take into here. That would take us higher. Yeah, so I'd hold that. You do have this upward trend line, which is capping price and order flow. So order flow is bullish here. So if we get a push back into the trend line and the fair value gap below the relative equal lows from last week Friday at Asia, that's a buy that you take and you don't let it go, right? Because that's going to give you what? Most likely it's going to give you $800 points, 880 points. All right, that's it. Tsepo, I don't think I have time for GU, to be honest. It's not something that I actively trade. We can have a look at it. It's not something I actively trade though, so let's have a look. Let's do a clean chart because why not? Right, where are we in the greater scheme of things? We are most likely at an order block, if I'm not mistaken. Yep. Nope, not yet. Right, so that's where your draw on liquidity is going to be. Look for this to get back up to the order block, at least here, right? What this is going to tell you is that at some point all of this is going to get taken. Whether or not it becomes a bullish retracement or bearish retracement is going to be the bigger question, because what do you have happening inside here on a very large time frame? Let's have a look. This was the candle that broke the low. Right, so bullish signs for GU. I don't like this on a weekly because the up candle is a green candle, or the last order block is a green candle. So maybe a run on the lows and then a move up. I'd take that as a better bet. But for now, we'd look for price to come into the order block line lying above us. I don't know if it took it on the weekly. It didn't, right? Just put my magnet tool on. We do have a fair value gap in here, so that's one of your PD arrays that price is currently at. Fair value gap, yep, there, and at the bottom of price there. No signs of reversal yet. Consolidating. Let's just go down to a lower time frame, 1 hour. Yeah, not anything that's bearish, to be honest with you. This is not a bearish. This is not a bearish pattern. This was a run on the lows here, and then what happened after that? Price moved back up, right? Price moved back up here. Let's go low time frame here really quickly. No fair value gaps in here. Let's just go one higher or one lower. Order block at the bottom here, and I'm going to end it on GU. Order block at the bottom, and this is where I would be looking to frame any entries for GU. This would be really early entry, right? Ideally you want to see price push above here like that, and then down here, so watch for that. But this is the level you're going to watch to give you that final push up on GU. And you can see there's no break of structure. Your break of structure would probably come here, so don't be too bearish. If you are, I don't know what your bias is on GU, but you only start to worry for now if we get below that price. All right, this is just going to give you a reversal. Again, the model, accumulation, failure swing, opposing liquidity run. This is going to push higher here. Push, retracement, off to the races. Right, watch out for that. Right, that's it. Thank you to all of you who have joined. Again, the Telegram link is in my bio on TikTok. You guys can join that. And I'll see you in the Telegram. It's a free Telegram. I'll see you in there. This will be on my YouTube channel. The channel is the same as my name, POISZN. So you can search for that, POISZN, on YouTube. And this entire stream will be up there. Right. Thank you guys. Have a blessed remainder of the day.